everyone. Welcome to our Melbourne Cup Day webinar, in which we will be discussing how to pick a winner in real estate by riding the infrastructure trail. I'm Terry Ryder, founder of Hotspotting, and my special guest today is Andrew Courtney from Plenitude Wealth, who is a member of our panel of partners. Today we're looking at the reality that many investors want a simple but effective formula for success in real estate, something with a little bit more certainty than betting on horses. And our belief is that there are few better ways than following the infrastructure trail. The research shows that most of the outstanding performers in real estate over time are those underpinned by strong local economies, boosted by investment in new infrastructure. And right now in Australia, the biggest national infrastructure project is the Inland Rail Link, which is a $35 billion enterprise destined to link Melbourne to Brisbane via the regional areas of Victoria, New South Wales and Queensland. And today I'm examining the impact of that major undertaking on real estate with the help of Andrew Courtney of Plenitude Wealth. Andrew, welcome.
Thanks very much for having me, Terry. Much appreciated.
Okay, it's an interesting topic, isn't it? To just isolate a piece of infrastructure and talk about the impact that's going to have on real estate, has already had on real estate. But of course, this is no ordinary piece of infrastructure. This is the biggest national undertaking ever in Australia, certainly the biggest currently underway.
Yes, without a doubt. And as you would have told your audience a few years back, because you've obviously been talking about this for quite some time now, what typically happens is you get that bit of news, and there's a little bit of a growth in the market, and then as the more and more funds gets invested in the project, what typically happens is the market tends to kind of rise a little bit. So I'm very curious from your experience, Terry, has it with infrastructure projects like this, or maybe smaller ones all around Australia, does the market spike upon sharing that information? And does it spike upon completion, or is it typically baked in already by the time it's completed?
All of the above, actually, Andrew. In fact, that's something I did want to touch on. The research and experience over time shows that it's actually three phases of impact on property prices on a major piece of infrastructure. And this has been researched by various entities over time. The first impact is when the project's announced. That can be, in some ways, the best time to buy based on the reality or the hope there's a piece of infrastructure is going to be in place in the future. But it's also very risky because we tend to have politicians who promise a lot, particularly during an election campaign, and then that project may not be delivered, or it may take 50 or 60 years to be delivered, such as the rail link to the Redcliffe Peninsula in Brisbane, which was promised for literally more than 50 years at every election that took place in Queensland until it was finally delivered 6 or 7 years ago. So that's the first spike in values. Then when construction starts, we start to see a bigger impact because people can actually trust the thing's going to happen. It's kind of rare for a major piece of infrastructure that's costing billions of dollars to be started and not finished. It does happen, but it's very rare. And then perhaps the lasting impact is when it's finished and people can touch it and feel and actually, experience the impact of a major piece of infrastructure, like a major motorway or a major new medical precinct with hospitals, etc. So there are three phases of growth. Probably we would suggest that people should not invest based on a political promise, phase one, but wait until the construction is actually started. And of course, we're at that well into that phase now with the topic of today's webinar, which is the Inland Rail Link.
Absolutely. It's been interesting, mate. As we've been talking over the past few months, I've actually just, as you're well aware, I've actually just driven that whole way. In fact, I'm back in Brisbane, but I did get as far south as Tasmania, or Hobart, or Clifton Beach down in Tassie. But I tell you what, it's a beautiful country that we live in, and it's a fantastic drive if you've got a lazy 3 days in front of you to sort of mosey your way down through regional New South Wales and Victoria.
Absolutely, it's one of my favourite things, driving through rural Australia. The landscape keeps changing. It's a fantastic thing to do. But I'm really interested in the fact that you did that. You drove basically you drove the entire route of the Inland Rail Link, and from Brisbane to Melbourne via inland, regional Queensland, New South Wales, Victoria. Why did you do that?
Well, look, because we're looking at acquiring properties in these areas, and I really just wanted to get my finger on the pulse, and just to get a good grasp of how these towns and these cities look like. And I thought, it'd be a great little exercise for me to go down there. And in saying that too, there's a bit of a lifestyle choice that we made as well as a family, is because we decided to live down in Tassie for 6 months, and I've got a big family van, and we filled it up full of stuff. The family flew down whilst I drove down. So killing two birds with one stone, basically doing a bit of research and doing some family stuff too. So got a big tax deduction because of the trip as well. So that's also a bonus. So can't complain about that one. And really just building up confidence around the thesis with the inland rail and acquiring the right properties in that area. Yeah.
Okay. Well, let's talk about what the route is then. We've just sort of broadly outlined it, but it's 1,600 kilometres, linking Melbourne to Brisbane. Construction actually started in 2018. It's very much a long-term project, because building or facilitating a rail link that long is a substantial undertaking. Partly it involves upgrading existing rail, and other parts involves constructing new rail track and new bridges. That's a major part of it. And so it's happening in phases, and we're already seeing impacts where the construction is happening along the way. But what are some of the key places along the route that you visited on your trip?
Yeah, so basically I went from Brisbane to Toowoomba, right? And then from Toowoomba down to essentially Gundawindi, and then through Moree and Narrabri, and essentially through to Dubbo, and straight down to, well, I had a look at Wagga Wagga and then Albury, right? And along the way saw parks as well. So those are the big areas that I really wanted to go visit. And the big takeaways for me is the safer bet as far as the common investor is concerned is the bigger cities where you've got university. That was the big thing that sort of jumped out at me, because with university means there's always going to be an influx of a younger population coming in on a year-to-year basis. And I think that will give the clients some more peace of mind around the growth in those specific areas. And one thing that I see a lot of value in is that little town called Parks, right? So I think there's definitely scope for more of a speculative play for the punters in this room, right? I think Parks is looking pretty solid as far as an investment's concerned, especially with the price points that we're looking at there. So that's pretty much the way in which I drove down. Yeah.
Yeah. Look, one of the things I like about the locations along the route of the Inland Rail Link is that many of them are good places to invest anyway. If the Inland Rail Link didn't exist, these are still places that we would have on our books as places we'd be happy to recommend to people, like Albury Wodonga, like Wagga Wagga, Dubbo, Narrabri, Moree. They all have things other than the Inland Rail Link happening. It's kind of like the icing on the investment cake, the fact that this major infrastructure project is going to kind of revolutionize the appeal, which is already strong.
Yeah, without a doubt. It's look at it. I'm a little bit biased, I guess, but I felt a buzz in the air as I was sort of driving down. It didn't help that I had a fly in the van, but no, that's all jokes aside. It was actually a really good eye opener to see how much building, because some of the things that I noticed in the bigger cities is there are a bunch of cranes out there. There's a lot of infrastructure being built, a lot of houses being built as well. So it's buzzing. I think it's definitely a great place to invest at this stage for sure. And it's not a seller's market at the moment either. That's the beauty of of the situation, because currently trying to acquire properties in Queensland and South Australia is really rough. Like, you need to be putting in valuations of offers above maybe 5, 10, 15% above valuations to be anywhere near competitive in this current marketplace. So it's a breath of fresh air to be able to have a chat to a real estate agent, and they don't palm you off with a multi-offer form, basically. So it's good.
Well, I think this is one of the great things about it. There's so many reasons why this is worth considering. You mentioned regional Queensland, South Australia, but also Perth, obviously. Investors piling into the Perth market and other parts of Western Australia, buying at the peak, having to pay above asking price, buying without due diligence, whereas you've got locations like these where you can buy sensibly, you can take your time, you can probably buy below asking price in many cases, but these are places that are A, affordable, and B, have got great prospects for capital growth. This is sensible investing. This makes sense to me, rather than piling into a market like Perth and buying at the peak after 3 years of extraordinary growth.
Yeah, without a doubt. It just blows my mind how some people are still jumping in. It's they've got a rude shock coming their way in 2025, unfortunately.
I'd like to point out to people there's a growing body of evidence that the peak has been passed in that Perth market. We're starting to see the rate of price growth fall. We're starting to see rental growth stop. And it was interesting to see the investor sentiment survey published this week by Australian Property Investor magazine, where they asked people where they thought the best markets to invest were now, and only 13% nominated Western Australia. Queensland and New South Wales were the top picks in that survey. So one of the other things that really stands out for me, having a look at the locations along the route, is the affordability. This is something that is important to so many investors. They can't afford to buy $700,000 and $900,000 property. They're looking to buy, if they can, below $500,000. These locations actually provide this. And as well as good prospects for future growth for various reasons, including the Inland Rail link.
Yeah, for sure. And as per a previous conversation that we've had as well, it's interesting to see the difference between units and houses in the area too, right? I think there's definitely scope to explore units as another opportunity to invest in, even though some people may think it's historically hasn't done as well. You just showed me some data last week or the week before that it has done reasonably well over the past few years, right? So that's another option that we've started to talk to our clients about, because like, if you want to acquire sub 500 and sometimes sub 400K, thereby lowering your risk, right, and acquiring under different entities, let's hypothetically say, you can get your borrowing capacity back sooner by being strategic about your choices, right? And units is definitely one way of going about it, especially if you're in the back end of your investment career, where you're honing in on a little bit more yield rather than capital growth. It's definitely something to consider adding into the portfolio.
Absolutely right. I mean, I think it's one of the most compelling trends, national trends in real estate in the last 10 years, the rise of apartments, as we call it. And so these are even more affordable options in places where houses are affordable by national standards. Parks, you mentioned, median price in the mid 400,000s. Narromine just outside of Dubbo, below 400,000. That's on the route of the Inland Rail link. Dubbo is a bit more expensive. It's above 500,000, but it's below 600,000, so still relatively affordable. Narrabri, 430,000. Moree, which is an interesting place, median house price 330,000. And Gundawindi, you mentioned, as we're getting into Queensland, 450. And of course, there's also Toowoomba, which is going to be the Queensland hub for the Inland Rail link. Lots of reasons to invest in Toowoomba, but the Inland Rail link and the fact that it's going to have a major hub for that facility right next to where the new Wellcamp Airport is, makes Toowoomba also a compelling place to consider, though more expensive than some of these other places we're talking about.
Yeah, 100%. Yeah, without a doubt. Yeah, we've been buying into Toowoomba for the past couple of years. And yeah, we've seen, I mean, we were buying when it was sub 300, and clients are pretty stoked about the returns so far because it's just skyrocketed. And it's probably, what do you reckon, Terry? It's got at least 3 years of growth in front of it, as well, in my opinion, with all of the projects hanging around, and the
Yeah,
completion of the inland rail, right?
I totally agree. I think the growth phase for Toowoomba is actually in the early phases. It's had an early phase of growth. With the second, again, it's about infrastructure. The second range crossing project is finished. The new airport is in place, but the big things are yet to come. The inland rail link is yet to come in terms of Toowoomba, but also they're about to start construction or have started the early phases of a $1.5 billion hospital, which is going to be huge for Toowoomba as well. So there's lots of compelling reasons to get into that market. Just a reminder to people watching and listening today that if you've got any questions, don't be shy. Let us have them. Type them into the chat box or the Q&A panel, and we will perhaps deal with them as we go along, or some we might save to the end of today's broadcast. But please give us your questions and your comments by typing it into the chat box. Andrew, you and I had a look at some of the numbers just in the last few days of growth that's happened in these markets. I don't know if you've got those figures in front of you right now. I've got
Oh, I don't, unfortunately. If you don't mind sharing it on your end, that would be great.
Okay. So what has interested me the most about the Inland Rail Link is that, it's a 1,600 kilometres of track, some of which is existing track but has to be upgraded. And then this new track that has to be constructed, as well as bridges that have to be constructed. And that's been going on since 2018 in different phases. So it's not all happening at once along the entire route. There's certain parts of the route that are happening at any point in time. And what I've noticed is that when we have construction happening in a particular part of the route, say outside parks or in the Moree area, we've seen a spike in property values when that's been happening, because it's a big undertaking. Lots of people coming to the area to live and work while that construction phase is happening. And we're talking about construction phases that extend over a number of years. Right now, there's the phase in Victoria between or from Beveridge and Victoria, heading north to Parks in New South Wales. That's underway now, but it's going to extend for the next 3 years. I'm expecting that to be finished in 2027. So quite an extensive construction phase having an impact on property values in the local area, because it's creating economic activity, it's creating jobs, people are looking for places to rent and to live, and so that's impacting property values. Parks was where they actually had the official federal government launch of the project back in 2018 or 19. I think it was the then Deputy Prime Minister that did the sod turning, I seem to recall. But around about that time, we started to see a spike in property values on parks, and that has continued. So what the numbers show is that the median house price for parks has increased 55% in the space of 3 years, from April 2021 to April 2024. So the median price is now up around 470,000. It was down around 300,000 when this project started to impact the local area. It's a substantial growth. That's comparable to what we've been seeing in places like Perth and Bunbury and some of those hot regional Queensland markets. So it's not all about Perth and Brisbane and Adelaide. We're seeing incredible growth in some of these regional areas that aren't getting any focus in the media.
Yes, which is not necessarily a bad thing for investors like us, right? I think in the end of the day, if you can, I mean, theoretically, the ideal position to be in is to acquire prior to mainstream media catching on to the news, right? And then riding the wave. As we all know, properties tend to kind of grow in cycles. So the ideal time to acquire these things is prior to a massive growth spurt, so that you can enjoy the upswing. Yeah.
That's what the smart investors are doing. Too many investors are media driven. They read that there's a boom in Perth, they want to be part of it, and still people piling into that market, even when the evidence is clear that market has passed its peak. But the smart money is going places that aren't exciting the media, places that have the credentials for long-term growth, places that are currently affordable, not competitive. You can buy well there, and there's an identifiable driver of growth. As I said earlier, all of these places are substantial in their own way. Albury-Wodonga is an amazing regional city, one of the most strategically located regional cities in Australia, because it's within 3 or 4 hours of Melbourne, Canberra and Sydney. So all of our big businesses that have a need for distribution centres, they have a big presence in Albury-Wodonga. And it's been an amazing property market over the past 5 or 6 years. Wagga Wagga, I think you went through there. Very, very strong, diverse economy. It's got a big military economy. It's got a university campus. Ticks all the boxes, really.
And out of curiosity, Terry, I mean, we've talked about Queensland and New South Wales a little bit. What are your thoughts about Victoria? When do you think the pendulum will swing and be a little bit more? Well, when is a good time to get in? Because I'm personally thinking 2026 is when we start doing a little bit more digging around the Victoria, or regional Victoria at the very least.
Well, it really depends on how you feel about the policies of the state government. The big problem for Victoria is there's no problem with its economy overall. There's no problem with population growth. It's actually leading the nation in some measures on population growth, because so much of overseas migration, the big factor, 84% of Australia's population growth last year was overseas migrants coming in, and a lot of them go to Melbourne. It's Melbourne, and Sydney gets the lion's share of that. So Melbourne's sort of pumped up with that. Its economy is fairly strong, and it hasn't had growth for a couple of years, so the buying is good. The problem is that the state government has introduced a raft of policies which you'd have to say are anti-investor. They've changed the rental laws massively in favour of tenants, and there's more to come. They have lowered the threshold for land tax, so pretty much anyone who owns a property in Victoria that's of an investment nature is now paying land tax, and that's the big issue. People have to overcome that mental hump, and the reality that property taxes are higher in Victoria than anywhere else in Australia. But if you can get beyond that, now's a pretty good time to be looking there, because prices haven't grown in Melbourne or places like Bendigo and Ballarat.
Yes, it's an interesting time, right? But I guess if you're trying to time the market, what do you think will happen over the next year in Victoria? Do you think we'll get some kind of uplift, or do you think the pains are still a little bit too high?
Look, I think we will get some uplift in Melbourne. Again, referring to the property sentiment survey published this week by Australian Property Investor magazine, I'm referring to that because I was just reading the results of it, and there's some really interesting findings. And one is that when they asked people, where they thought was favourable to invest in terms of pricing and value for money, Melbourne and Victoria ranked very highly. Investors are definitely thinking about it. Their hesitation will be, again, the attitude of the state government towards investors. But in terms of favourability from an affordability and pricing viewpoint, Melbourne and regional Victoria are pretty high on people's lists of consideration at the moment.
Nice. And sort of outside of the inland rail, obviously we were talking about Tassie as well a few weeks back. Should we sort of venture into that territory as well, to just talk about that as an option too?
We can. Certainly, it's one that we're starting to focus more on. One of the factors that stands out is that PIPA, Property Investment Professional of Australia, recently published a survey that they'd done looking at where had been the best capital growth in the past 20 years across Australia, and they found that regional Tasmania was number 1 and Hobart was number 3. Not Perth, not Adelaide, not Sydney, not Melbourne, but Tasmania took 2 of the top 3 spots in terms of long-term capital growth. Now, we often say to people that the past does not necessarily inform the future. The fact that a location has been a national leader in the past doesn't mean it's going to be in the next 10 years. But we do see prospects, particularly in regional Victoria, because there's good buying there, there's good rental yields, and there's prospects for growth in places like Launceston and Devonport and Burnie, where you can buy. Again, the market's not competitive at the moment. But what we call second wind markets, and we've talked about that. We like the idea of second wind markets, and what we mean by that is places that had a sprint, perhaps 3 years of growth up until maybe the end of 2022, the start of 2023. They've had a pause, they've caught their breath, they've got their second wind, and now they're starting to go again. And that's a normal cycle. So opportune time to buy is kind of about now, when markets that have had pause for the last 18 months or 2 years are now just starting to show signs of growing again. And we think that some of those northern Tasmania regional centres fit that category.
Got a question here about Brisbane picking up ahead of steam off the back of the inland rail infrastructure potentially. Is there much scope for growth in the next few years as well, is what I'm sort of reading between the lines in this particular question?
Yeah, look, there's all sorts of reasons why Brisbane as a market is going to show signs of growth. I mean, there's so many things in its favour. Internal migration numbers massively favour Brisbane and Queensland generally. Every state in Australia, every state and territory loses population at the moment to internal migration in net terms, except Queensland and Western Australia, and Queensland's the biggest beneficiary. We have some interesting numbers out in the last week from PEXA, and also an analysis by money.com.au showing that in the September quarter, the overwhelming weight of real estate transactions, the total about money spent, Queensland number one by some margin. There's more money being spent on real estate in Queensland than New South Wales or Victoria, despite the fact that those are much bigger states with much bigger populations. That's an interesting number. It shows that people, both home buyers, people moving from other parts of Australia, as well as people migrating from overseas, are focusing on Brisbane and Queensland, but also investors in particular. So we've got a lot of money pouring into Queensland, into Brisbane, and of course you've also got the impact of the 2032 Olympics. If the new state government can get its act together better than the outgoing one, because there's been an awful lot of stuffing around, Andrew, and not a lot of decisions being made in terms of venues and what they're going to invest in to get ready for that major event. But history shows that the big impact of Olympics is in the lead up, not after the event. It's the investment in infrastructure. Again, it's all about infrastructure. That has the big impact. So, to answer that question in one sentence, yes, I think Brisbane's got great prospects for growth going forward.
Obviously, the price point's a little bit higher. So the main thing that you need to consider as an investor is what is the cash flow deficit? What's the cash flow impact in your particular portfolio, in your current lifestyle, to be able to afford to control said property? And obviously, if you're acquiring under your name, you got your negative gearing benefits, some depreciation potentially. If you acquire under a trust, that goes away, right? So you've got to sort of make a judgment call on what's the best entity to acquire these assets under. And more importantly, think about what kind of timeline you're looking to hold on to these assets for as well, basically, because it's got to fit within the broader picture, the broader strategy that you have for your particular finances. Yeah.
I think you touched on a very important point, the importance of having a strategy in the first place. And I'm amazed how many wannabe investors I encounter in various ways who really don't have a clear strategy. And I think that's why people need to be talking to people like you and businesses like yours. It's so important to have a clearly defined strategy and understand why you have the strategy you do. So firstly, you've got to have your goals and objectives sorted out, and then develop a strategy for getting there, and be prepared to pay for good advice to help you implement that strategy.
Yeah, 100%. One thing, maybe if I could share my little iPad, I'd love to kind of show what the ideal portfolio journey looks like. This is something that I share with all of my clients because far too many people do something, i.e., hone in on yield or income when they're already earning 200 grand and above, right? Thereby getting taxed 45 cents on the dollar on the portfolio that they've built up, on the income that they're producing. So that if you don't mind, let me quickly share my screen here, and I'll quickly show you guys the ideal portfolio journey as you sort of maneuver through to achieve the portfolio target, which is really getting to a portfolio income or a passive income, right? So this is the goal. We want a passive income from our portfolio, right? And our investment focus needs to change as time progresses, right? And you need to work out what kind of timeline you're working with, right? Most people don't understand that there are 3 phases to the game. The first phase, the second phase, and the third phase. The third phase is the easy part, right? So what we need to do is we need to understand that there are multiple phases that we need to sort of plan for. The first one is we're trying to get the highest return on investment possible, basically, to build massive momentum for the future. And the goal is to grow your portfolio as much as possible by getting the highest return on investment possible, right? So what are the different kinds of returns? Well, there's income and capital growth. If you're already earning an active income, it doesn't particularly make sense to earn any more on top of that, especially if you're getting taxed 45 cents on the dollar. So in an ideal world, you want to hone in on a growth-orientated portfolio. And this is where loan-to-value ratios and how you structure things and what kind of assets you acquire is crucial, so that you can transition from a growth-orientated portfolio to an income-orientated portfolio in number 3. Now, the second part of the equation is to understand that the game is to lower your tax payable. Because what happens is you are focusing on less growth, but more so on the income side of the equation. And this is where understanding what entities to acquire assets under is crucial. You can buy under your own name, under a trust, under a company, potentially an SMSF, right? And where most Aussies go wrong is they ignore this, and all they do is acquire more assets and aim to replace their income far too soon, thereby accumulating a bunch of taxes. So if you can keep this in mind within the context of your timeline, and the timelines that I always talk about is, when do you turn 60? Because that initial timeline is called your super timeline, right? As soon as you hit 60, you hit this thing called the preservation age, where you can start withdrawing some funds out of super and be a little bit more strategic in your approach, right? And then you could potentially got a 5 or 10 year timeline, and then a 1 or 2 year sprint. So you got to ask yourself, well, with the timelines that you currently have, are you actually maximizing the upside that you have in front of you to increase the likelihood of achieving the income that you want? And for a lot of our clients, the income that we aim to replace is basically the current income, potentially add an extra $50,000, $100,000 on there as a stretch goal, and a big, hairy, audacious goal, double their current income, right? So this is all very doable if you're strategic in your approach, and if you're methodical about how you sort of optimize for a better outcome. The key is to be proactive in the way you approach things. Yeah.
So in broad terms, how does residential property fit into what you've just been talking about?
Yes, so residential within the context of our portfolio is really at the start of that process. When you're trying to build massive momentum, what you're doing is you're looking at depending on how aggressive you want to be and how much borrowing capacity you have, right? You're looking at as high a loan to value ratio as possible, because the funds to complete, or the cash that you put in there, could literally get you a return on investment of above 100% if you do things correctly, right? So the higher the LVR, the more return on investment you get, especially if you're getting 17, 20% return growth within the residential properties that you acquire, right? And this is the beauty of making sure that you've got a solid investment strategy within your superannuation and outside of superannuation that complement one another within the timeline that we're talking about. Yeah.
Okay. So just going back to the Inland Rail link and the towns and regional cities along the route, the sort of prices you pay for property along there, what do those sorts of locations offer to what you've just spoken about in terms of having a strategy that fulfills certain criteria at different points along life's journey.
Yeah, well, look, relative to the Sydneys, Melbournes, and Brisbanes of this world, is that what it provides you is lesser risk, right? Because the risk comes in a deficit, in a cash flow deficit, because the yields are a hell of a lot higher in these regional centres, right? So what happens is, instead of it's costing you $45,000 to hold on, it's costing you less than $10,000 to hold on to these investment properties. And if you acquire with the right loan to value ratio, what happens is you're getting a really sizable return on investment. So I'm inclined to think, well, what kind of timeline are you working with? Because you could make an argument, a business case, that in every timeline, so long as you've got borrowing capacity available, it makes sense to invest in these places, because the returns just amazing relative to what you can get elsewhere, and more importantly, relative to the risk that you're taking as well. It allows you to diversify further, so that you're not hoping and praying that one city will grow in value and hit its cycle sooner, basically.
Yeah. For most of the locations we've talked about today, they're along the route of the Inland Rail Link. I think it's pretty common that you'll be able to get gross rental yields of 6% and above for houses, more for units. And a place like Moree, and I know Moree quite well, I have owned property there in a self-managed super fund, above 7% rental returns for houses. Not bad. And given where interest rates are at the moment, a rental return like that starts to look attractive. But has it got growth prospects? I believe it does. There's actually quite a lot of government investment focus on Moree, because it's a strategic regional town. It's got an important agricultural area. There are important resources projects happening in the area, and there's investment in they're developing plans for a university campus there. But the Inland Rail Link is kind of like, again, as I said, the icing on the investment cake. That takes places like Moree to another level in terms of its future strategic importance. So if you can buy a solid house there in the 300,000s and get a 7% rental return, it's how does that fit in the sort of strategy that you're talking about?
Yeah, I think if you assume an inflationary growth, that 7% return would be an amazing return on the back end, right? Because what happens is, in an ideal world, within that portfolio journey, you want to maximize the growth on the front end, and on the back end of your journey, you're in some assets, some of these properties, and looking for the right properties in your portfolio and the right assets that'll produce the best yield to achieve your lifestyle targets, right? So these 7%ers, I mean, it's an absolute no-brainer to hold on to on the back end of your investment journey as well, because the goal would be to just to supplement your existing income if you're still working, and or replace your existing income when you decide to retire, basically. Because in an ideal world, you want to get to a stage where your net asset position is growing whilst you're still getting a pretty solid passive income from your investment portfolio. Where most people go wrong is they don't really think about these things, and they're forced to sell their assets over the long term, thereby depleting their net asset position whilst propping up their lifestyle costs. Right? The sweet spot is maintaining the net asset position whilst getting a 5% sort of yield out of your investment portfolio. And even the better position is to grow your portfolio at inflationary rates and get a 5 or 6% yield out of it as well. That would be amazing. Yeah.
And the reality is, of course, and we often talk about this, is that there's no one right way to do any of this. Sitting down with an advisor like yourself or members of your team and talking about the individual circumstances and developing a plan that is kind of bespoke to their situation.
100%, 100%. And look, for some of you guys, maybe this is a good time for a shameless plug, Terry. For some of you guys, I would love to sort of invite you along to a webinar that we're running next week. Right, so we're running a webinar called "The Top 6 Mistakes Aussies Make, Costing Them Millions of Dollars." Right, so let me quickly share my screen with you. And Tim, if you don't mind sharing that link on the chat box. So this is it right here. You can reserve your spot. It's happening next Wednesday lunchtime or Wednesday evening at 6 p.m. That is Queensland time. So for anyone who's interested in learning more about this, please feel free to come along. And for others who are wanting to sort of skip the line and have a chat to myself and my team, please feel free to go to plenitudewealth.com.au as per this website up here, right? And book a time, and we can have a chat to explore your options further. Yeah.
Okay. I just, in the time we have left available, and again, I want to encourage people to give us your questions and comments. Just type them into the Q&A panel or the chat box. We will have some time to respond to your questions before we wrap up the broadcast in the next 15 minutes or so. But I just want to go back to some of the numbers, returning to the route of the Inland Rail Link. I touched on a few. For example, I think I gave the numbers for Parks, how much we saw a spike in values as a result of the construction phase of this project. Narromine town, not far from Dubbo, median price grew 52% in 2.5 years between 2021 and 2023. While that phase of the project was happening. Dubbo, its median price is up 41% in 2 years, partly as a result of the influence of this project. Narrabri, up 24% in 2 years. Moree had a spike when the construction phase come along, 32% in the space of 15 months.
Wow.
But I do believe that the greatest impact from this project is not while it's being built, it's going to be when it's finished and the whole project is operating. And these, the strategic importance of these locations, these regional centres, is going to be revolutionised by the carrying of freight between Melbourne and Brisbane.
Absolutely. Yeah. So look into it, guys. I think it's totally worthwhile exploring these particular options. The no-brainer would be to sort of explore getting a higher return on investment with your capital, coupled with your borrowing capacity to sort of get you to your financial goals sooner, for sure.
I've got a question here in front of me which relates to our topic. Came from Mark. He emailed it to us earlier in the week. He's asking, when is the Inland Rail Link proposed to be finished? How long is a piece of string, Mark? It's a major infrastructure project, and anything to do with government spending is a little bit uncertain, of course. I did a bit of research to try and answer that question before coming to the live event today, and it's pretty hard to find a definitive answer. I think it's because they don't know the answer.
Yes.
What they do say on the official Inland Rail Link website is they're currently doing the section of construction between Beveridge in Victoria, which is a little bit north of the Melbourne metropolitan area, and Parks in regional New South Wales, and that's prioritised for completion in 2027. And I'm not saying the entire project will be finished then. What they do point out is that there are parts of the work that have already been completed, other parts along the route of the Inland Rail Link that are under construction, and others that are in the planning phase. So it's going to extend for a number of years, and I don't think anyone can say definitively exactly when it will be completed. What we can say is that the construction work is going to have impacts on residential property in the various areas where it's happening, and ultimately, eventually, keeping in mind that real estate plays are or should be long-term in nature, there's going to be a substantial long-term impact when this thing is all finished, whenever that may be.
100%. Another comment here. How much impact do you put on other types of infrastructure, such as hospitals, Gary?
Yes, well, one of my favourite topics. Thank you for asking that question. When we're talking about infrastructure, we're talking about transport links like rail links and motorways. We're talking about medical infrastructure like hospital complexes. We're talking about university campuses. We're also talking about smaller but nevertheless influential, like new schools. Anything of that nature comes under the general heading of infrastructure. But I think probably the most influential of all hospitals and universities. And that's because there's usually thousands of jobs in the construction of them, but there's even more jobs in the operation of them. There's actually a lasting impact because it creates economic activity and jobs as long as that facility exists. More jobs in running a hospital than building it. And I mention universities and hospitals together because they tend to cluster together in our major cities and in our regional centres as well. But they naturally feed off one another, so it's quite normal for a precinct such as the Carlton Parkville precinct in Melbourne, where you've got two major university campuses and a big hospitals complex as well. You've got that on the Sunshine Coast, where the new about 10 minutes of the Sunshine Coast University campus. So that type of infrastructure does have a lasting impact on real estate markets. It's one of the main reasons why Sunshine Coast has been a national leader on capital growth over the last 4 or 5 years. The impact. There are other infrastructure projects also on the Sunshine Coast, but that was the big one, the new medical precinct, the Sunshine Coast University Hospital.
Awesome. Good stuff.
Okay, so any other questions, please give them to us. We're happy to take questions, anything to do with real estate, about any of the strategic issues that Andrew talked about a moment ago. Any questions about locations that you might be interested in, any comments that you have.
Whilst we get bombarded with the questions coming at us, I'm sure there'll be a few before. What I want to sort of let everyone know is just to understand that you've got timelines. Every single person in this audience right now has a different timeline to each other, right? So what you need to do is you need to prioritize according to what you're trying to achieve in your life. So what I suggest you guys do is you paint that vivid picture for the future. What's ideal? What is it that you'd want to achieve, right? And push yourself to talk to someone to explore whether or not you can achieve those. Because if you're doing it by yourself, you're literally reinventing the wheel, right? And that's the last thing you want to do. If you can save yourself years, if not 5 years or potentially decades of time, I think it's totally worthwhile. When the rubber meet the road for me was when I started investing in myself and investing in coaches and mentors like Terry, right, in my network to speed up the journey. Because if you don't speed it up, you're going to be running at your own pace. And for some of us in this room, unfortunately, the pace ain't fast enough to achieve our goals, basically. Right? So I suggest you have a good think about how much you've achieved thus far. Are you content with what you've achieved? And is there more in the tank? Because if you can keep doing it yourself, fantastic. But if you want some help, it's amazing how much further you can go. What you need to do is stand on the shoulder of giants, because that's how giants are made, basically. Cool. Terry, another question here. So it seems like, what are your thoughts on Albury Wodonga?
Yeah, well, one of my favourite regional cities in Australia. I really love this place. This is the sort of place that I think, is a really safe place to invest. The sort of city that I always recommend consider strategically located within striking distance of the 3 largest national capital plus Sydney and Melbourne. Major presence from significant national and international businesses, so lots of jobs being created. It's a growing city. It's on the big river. It's on ideally, we like people to invest in places with a minimum population of, say, 30 to 50,000 and above, because when you get to regional centres, that's typically places that are going to have the most growing cities. Sometimes we make an exception for specific reasons. We have been known to have areas of as close to 50,000 provided there are really strong economies question for Andrew touched on trusts and super funds. These smaller locations be suitable for SM, investment?
Look, the short answer is yes, absolutely. You just have to be careful of all the policies of the lenders that are currently lending, because you could be stuck with a lower loan to value ratio, and sometimes they won't even lend in specific areas, basically. So, for example, like the Gladstone, for example, is we're finding it very difficult to get any lending, even though it's obviously got a bad reputation in the past, but now it's really coming around. Right, we're very surprised to have financiers saying no to Gladstone when it comes to acquiring within the SMSF. So when you are looking to acquire within your SMSF, what I suggest you do is you just run the numbers and you talk to your broker or your financier about, well, what's the policy that the banks or the lenders have on the specific areas that you're targeting, right? Because for the vast majority of these, they're pretty much good to go as far as SMSF is concerned. So yes.
In terms of just generally speaking, funding options for SM, and so a lot of the major lenders don't touch them.
Yeah.
Are there still good options out there to borrow for your self-managed super fund?
Yeah, for sure, absolutely. The catch is you're probably paying about 0.8 to 1, maybe 1.5% more than what you're paying the regular lenders, basically the banks, the big banks. So that's part of the, I guess, the complexity of acquiring within a self-managed super fund. Hence the reason why you really want to be looking at the right investments that's yielding well enough so that the fund I guess pays for itself, right? Because the last thing you want to do is be either forced to sell or be forced to add more contributions when you don't have that excess surplus out of your cash flows, basically. Yeah.
And speaking of Gladstone, that you referred to a moment ago, there's a question, do you know if the rail, we're talking about inland rail link today, will make its way to Gladstone eventually? There was some talk of that. Yes, there was a proposal put up at one point that as well as extending from Melbourne to Brisbane, there would be a further extension of the inland rail link to Gladstone because it's such a strategic city with a very important export port. I don't think that suggestion ever had any serious legs, and I don't think it's going to happen. But there are other good reasons to invest in Gladstone. I'm really surprised that lenders would be negative on Gladstone. I think their view of that city is like 10, 12 or more out of date. There was a boom bust phase for very specific reasons way back in 2010, 11, 12. But these days, Gladstone's a very, very solid regional city. It does have an impact from the resources sector, but there's a lot more happening there. And right now, we're seeing lots of investors buying there. High level of affordability, great rental yields, and prices are growing. So it's worthy of consideration.
Yeah, we've picked up a few properties for our clients in Gladstone for sure. Not in the SMSF, but certainly through trust and personal names. Yeah.
Okay. So Andrew, we were just coming to that time. We need to think about wrapping up the discussion today. Do you have a call to action or some details about how people might be able to follow up if they'd like to get in touch and find out more or talk about their own circumstances?
Yeah, 100%. Best place to go is our website, www.plenitudewealth.com.au. Right, and if you're interested in coming along to the webinar, our Tim has shared that on the chat there. Learn the opportunity cost, basically, webinar. 6 major mistakes that Aussies tend to make, costing them millions of dollars of opportunity cost. So if you'd like to learn more, come along to the webinar. My goal is to educate 1 million Australians by the time 2027 comes around. So the more the merrier, I say. And the more questions you have, the better as well, because everyone in the room's got something to learn, and I'm sure your questions will add value that way too. So everyone's welcome to come along there. And for people who are keen to sort of get some help as well, just follow the prompts. We'll be able to sort of see if we can add value to your situation. If we can, we'll provide you with a proposal and do some business together.
Okay. Well, thanks, Andrew. I've really enjoyed today's discussion. We've ranged across a number of topics, but we've also had a particular focus on the impact of the nation's largest national infrastructure project and the possibilities for investing in regional centres along the route of the Inland Rail Link, and the possibilities to make substantial gains from following a strategy based on that. And I was just fascinated to learn that you'd sufficiently agreed with that proposition to actually drive the route from Brisbane to Melbourne and beyond.
Yes.
Interesting thing to do, but I think it's probably what it has done is just reinforce the wisdom of a strategy like that.
100%, 100%. I wouldn't do it without cruise control though. So you got to have that cruise control and a few doses of caffeine to make it work. But the landscape's amazing. It's beautiful. So
I think you were doing most of the driving.
yes, absolutely. Well, I was alone at the time, so it's lots of audio books and lots of caffeine. So it's all good.
Okay. Well, thanks for your contribution today, Andrew. I do encourage those of you out there watching and listening to follow up and get in touch with Plenitude Wealth to speak to Andrew, Courtney, and all members of his team to talk about your own situation and ways in which they might be able to help you develop an investment portfolio, including some info